The IESE Center for Emerging Markets recently hosted an international forum featuring leading experts on sub-Saharan African markets, from Mali to Mozambique, South Africa to Senegal. IESE professor Sanjay Peters explains the importance of this forum, while three business experts representing Kenya and South Africa present the prospects and opportunities for investors in markets that remain largely unknown to many European firms.
One of the main objectives of the Emerging Africa and the Global Business Revolution Conference was to draw attention to this region of the world, which has, for the most part, been completely overlooked or just disregarded altogether. And the idea is that there is a transformation taking place in the global economy, and it's important for business leaders in Europe, particularly in Spain, to be aware of these changes. One of the important aspects of the conference was that obviously it's not going to overnight change the ideas of business people about investments, but certainly it's opened their eyes to considering the region for investments. Angola, Mozambique, and there are enormous opportunities in infrastructure development, hotel development, road construction, airports, a whole lot of opportunities. So our idea was to draw attention to various sectors in which Spain currently is now struggling because of the global recession, whether it's in food processing, agriculture, and even high-end activities, to consider different African countries, sub-Saharan African countries, to explore what opportunities exist, rather than just simply consider the European Union. The European Union is forecasted to grow at less than 2%. In contrast, Africa as a region is growing quite stable, and after emerging Asia, emerging Africa is perhaps the one that's growing fastest.
We see that markets are moving towards the emerging economies. People talk about the BRICS. These BRICS and more Asian countries, Middle Asian countries, Japan, China, Malaysia, Indonesia, Korea, India, all these countries form a population of 3 billion, over half the population of the world. Africa forms another 1 billion. If the developing countries do understand that the markets are shifting to emerging economies, Africa forms an opportunity thanks to its market.
In actual fact, there's a demand for a lot of products, especially fast-moving consumer goods. And perhaps what makes it more niche, what's niche about it, is the fact that most of these people can be found either in townships or away from big towns, but there's still a lot of demands. When you look at, for example, how mobile phones usage has increased, usage of microfinance products. So for companies and businesses that are able to deliver products in a different way, there is a big opportunity. For example, the sizes of packages. So people can't afford to buy perhaps a big box of soap powder, so you deliver it in small sachets. Or instead of a big tin of coffee, you have, one size sachets. So I would say that method of delivery, packaging, pricing, and then the distribution channels. Distributing in non-traditional ways, not only to big retailers in town. I would say another niche market, potentially not necessarily niche, but a big market, is the market that women represent because of the latent demand that they have. From the point of view of being able to start or build and grow your business, as you can imagine, startup capital and expansion capital are two very important sources of finance. We don't really have a developed venture capital market in Africa, and yet the financiers that are operating in the market are your commercial banks, and the commercial banks are not really at a stage where they're understanding how to deal with entrepreneurs who don't have collateral, who don't have security to offer. Other challenges might include aspects which are more practical. For example, getting licenses for your business, the time that it takes to register, getting the right tax approvals, so on and so forth. The systems are there, but sometimes they don't work very well. Third challenge is skills. And I suppose the way to overcome that is for over the long term, obviously, for there to be more educated workforce coming out of the system, but also maybe for the skilled people to also consider entrepreneurship as an option for themselves.
What really makes it unique, or what defines African entrepreneurship, is the environment in which the entrepreneurs operate. And this is largely shaped by the political environment and the economic policies. We started with very highly regulated economies. There were a lot of regulations, price controls, exchange rate controls. All this made it very difficult for entrepreneurs. We have seen changes now in the African environment. We have better governments, we have more democratic institutions, we have a better market economies. A lot of Africans have not been able to take risks just because they can't do business because of infrastructure like roads, electricity, telecommunications. So I see the role of the public sector, broadly defined, to be critical in fostering entrepreneurship in Africa. And in the past has been a barrier, but now the public sector is facilitating local entrepreneurship.
Business schools form a clear foundation and a clear source of good executives to run businesses in the emerging economic front in Africa. We have not had business schools for a long time, and we generally know that countries like the United States, countries like in Europe, have depended a lot for their executives in business schools. I felt it was crucial that we formed our executives to understand the global economy, to be players in the global market.